Hello, everybody, and welcome to the latest Norman Alex podcast, where we're looking at the family office sector with two guests. The first guest from the US is Richard Wolkowitz. Welcome, Richard. Richard's had experience of managing his own family office, of managing other families' private offices, and also being a senior advisor to certain families. And Francois Mollat du Jourdin from Paris. Welcome, Francois. Francois is one of the pioneers of family office advisory work, certainly in France and probably in Europe. So maybe you can introduce yourselves without further ado. So maybe we can start off with our American guest, Richard, and maybe you can tell us a bit about your background.
Sure. Well, thank you, Ivor, and nice to see everybody. So I'm based here in the middle of America in a city called St. Louis. I'm a lawyer by background and practiced international transactions for about a decade. Most of my clients were family enterprises, and so I helped families across all continents in transactions, which led to closer relationships with families and asking them to do more than just be their transactional lawyer, but their family lawyer and consigliere. As Ivor mentioned, I had my own family office, which I was a Generation 3 leader for 15 years before we had a liquidity event, and then managed two other U.S. families, single family offices for a period of time. So delighted to be here and to have the engagement and talk about differences and similarities, what our observations may be in Europe versus the United States.
Okay, thanks, Richard. And Francois?
Thanks, Ivor. Hi, everybody. Very happy to be here today and to chat with Richard. I'm Francois Mollat du Jourdin. I'm by background a former private banker. Nobody's perfect. And I decided after about 10, 15 years in the private banking sector that the family office, which was just appearing as a concept, it was just at the turn of the millennium, was a necessary step for wealthy families. So I decided to create my own company, my own family office. So I created it now back 20 years ago. It's still in operation today, based between Paris and Geneva. We work alongside with French and international families, Geneva being the hub for international families. I've been also historically extremely active in the French Association of Family Offices, where we've been working on defining what this family office job should be, what the content, what the good practice should be. And I've been extremely involved in this association for the last almost 20 years also. And I also had a network of independent family offices like mine in Europe called ENFO, European Network of Family Offices. And I'm thrilled today to be here and to have this discussion with Richard, because it's true that we have lots of similarities, but there are also some differences. And the list is being that, as usual, I guess that the US is a little bit ahead of us.
Okay, thanks for that, Francois. Maybe the first question is, when you are a wealthy family, when should you have your own private office, and when should you outsource it? And are there any specific functions such as wealth planning or specific investments that should be outsourced rather than being kept in-house? So, Richard, what's your view on that?
Sure. So I really like to advise families to, you've probably heard of the approach crawl, walk, run. I really like families to take a real long look at going very slowly in the space. First, defining, really what's your family purpose? What are your needs? Usually when a family has a immediate transaction, post-liquidity kind of situation, they're very quick to react to form this big infrastructure and hire people. And what they don't realize necessarily is that hiring people and forming this big structure means that you're back in business again, which might be the very last thing that some families want to do post-liquidity. If the family has an existing family office, again, it may have been formed years ago or generations ago, and it's a really healthy thing to do to get families to kind of pause and reflect and think, really, what's the purpose? Have we outgrown our mission, what we originally set up for? Do we have the right governance in place to manage all this? So again, taking whether or not you have an existing family office or one that is in formation, I really advise families to move very slowly and cautiously.
And are you seeing any different trends in terms of the size of wealth before you decide to set up your own office, or has that remained pretty constant over the last 10, 20, 30 years?
So I think the trends I've seen, and I've been in this space since the 1990s when I was practicing law and advising families in their family offices. I think one of the most overlooked family office concepts there are, that's probably the most popular, which are embedded family offices. Those families that have operating companies that have discrete people providing services for those families. So it may not be a function of wealth, but a function of convenience and necessity, so that the family can actually function in business in a high-performing way, and delegating or segregating some of the family services, encapsulating them within the family operating company, and so that the family members have a go-to person before they begin sort of this outsourced or single family office model. So I'm seeing more of a trend towards operating companies having staff performing family office functions.
And Francois, what was your take on that in-house outsourcing?
I said that for me, there is no answer, no right answer to your question. I fully agree to what Richard said. That is that, well, the embedded family office for wealthy entrepreneurial families is the logical and the historical scheme that you usually see. And very often it has not really been structured or reflected in a very structured manner. It's just to answer certain needs of the family or the members of the family that a structure has been has been set up, and then it begins to structure deeper and deeper while the family is growing and while the needs are getting wider. What I see here is also the other option is when there is a liquidity event, and all of a sudden the family faces a brand new challenge that they were not even imagining, which is, my God, I have loads of cash. What should I do with this money? And I mean, they've been extremely successful, and they have no clue, or they are not really well prepared. So that's why the embedded family office is really very often a very, very good step towards the future potential liquidity event. However, if not, I'd say that once again, there will not be any good answer. And the trend that I see today is more and more that even the single family office, which is either embedded or set up for further to a liquidity event, is going to be outsourcing certain of the expertise that are needed for the family office. I say that here it's what I've seen is really on a case-by-case basis, and there is no rule. And usually the single family office will really look like the family culture and the family history. And this is what is key, that the family members can really feel legitimate towards the structure that has been set up as a family office. They feel legitimate toward the company, the family company. They need to still feel legitimate towards this structure.
And as an independent advisor, how much of your work is managing a full family office on an outsourced basis, and how much is doing specialized functions with a family office already established where they want to work with you for a specific theme?
I'd say that historically, we were working as a full-fledged family office for several clients. And this new trend that I've seen over the last 5 to 10 years, seeing single family offices who have their own structure, turning out to outsourcers like us. I mean, they are obviously outsourcing to banks, to law firms, to etc. But outsourcing to people like us is something which is, really a new trend, and where we share the culture, we share the long-term view, we share the independence also. We have nothing to sell, and we bring in some expertise and some capacities that they may not have been able to gather at the right level as they may be willing to.
And the point I wanted to discuss with you both, Richard, you use the word consigliere, and when you think of a consigliere, you think of someone there to protect the family, not necessarily just financially, but for more general stuff. How do you protect second generation, third generation families when the children inherit wealth? Not in terms of financial planning, that's relatively easy, but in terms of just protecting them and making sure that they handle the new money they're going to inherit in a sensible way.
You're right. The role that we tend to play is a really intimate role, and it begins, and it takes years of trust and relationship and experience to build up. And so the sooner that a family can get someone like Francois or myself to be involved and engaged and go through that life kind of moments with the family, the more that we can be there to be that non-family member, advisor, consigliere, trusted person that the children, the next gen, can go to as well, and sort of be that intermediary that they may be embarrassed or afraid or not sure how to ask a family member. So the first thing, besides being just engaged with the family, and it really is true engagement, being available all the time and physically present as much as possible, but really begin to have alignment discussions with the family and the children. What does this wealth look like to you? Let's just take a small family, a mother and a father and 3 children. Each one of those 3 children come from the same parents, but they may have a different perspective on wealth depending on the time and birth order that they were involved in, depending on the situation. So you could have 5 people in one core nucleus family that has 5 different perspectives. And so if you take that kind of scenario and you take it into the context of a larger, broader family, which has maybe several generations and several branches, you could have so many different perspectives on wealth. So I think the first step is really having a discussion and alignment around what is that? What does that look like to you? Because if you don't understand the baseline, it's really dangerous to then make certain assumptions or have a top-down kind of approach towards wealth.
And how do you learn those soft skills? Because they are soft skills. You're a lawyer by training, you're not a psychologist, you're not a coach. So how do you learn those types of skills?
I think one is just listening and being curious. I think the families of great wealth really are lonely many times at the top. They're very isolated. They don't know who to trust. And many times people are just coming to them for a financial transaction. So I think listening, building the trust, and showing that you're relationship driven is really important.
And Francois, how do you address those problems?
Well, trust, as Richard mentioned, I think is the key. It's a matter of trust, of course. It's also a matter of education and governance. And this is what Richard was mentioning. I'd say that governance is a big word for a common sense process, which is if you set up the right structure, which is getting the people and this nuclear family that Richard just mentioned as an example, for example, getting these people around a table once a quarter, for example, just to share a little bit of their feelings, of their views, etc. Talking is just the first common sense step that you should be taking. And I think this is one of the answers I would give also to how do you learn these soft skills. I said that for me, there is lots of, first, you need maybe a little bit of white hair, although Richard, you don't have that much, that many. Yeah, okay, it begins to appear. But otherwise, I'd say that it's very much of common sense and listening to the people. Then you also have some very, very, very good experts around these specialties. So when necessary, you can call in a psychologist, you can call in an expert in family governance, name it. You have all types of experts today that you can really bring in the game. And as I always say, my job is not to do things, is to have things properly done. So I'm not here to deliver. I'm here to have things properly delivered by the right specialists. And I think it's something which is very, very important. And it's also an answer to your first question, insourcing, outsourcing. I'd say that you cannot be good at everything anyway. So at a stage or another, you will be outsourcing anyway.
And Richard, has it been a help to you to have managed your own family office? Or do you think that each family is so different that it doesn't really make a difference?
No, I think having that personal experience, and it wasn't always having successes. We've had some failures. And I think having those failures really have been more of a helpful lesson on how to go forward and help others, and really a catalyst to what drives me to be in this field. We didn't always succeed, and I want to make sure other families don't experience the same thing. Now, I agree 100% with Francois. I like how you said that, how you don't necessarily do things, but you make sure that things are done properly. And that's a really great guidepost to helping families understand that not every advisor can be 100% there to do all that needs to be done. And they should look at themselves too, with that same kind of humility, to say that the leading gen doesn't necessarily have to do everything, right? And I think looking to the next gen, I'm a big believer in not a top-down approach where the leading gen mandates and requires everything. That's one way to make sure, I believe, that the next gen or the rising gen, the younger generation, doesn't really buy into it, and they may rebel, right? And
I was going to ask you that. You must have a lot of examples. You talked about trust, Francois, where the principal, the original principal, the founder, trusts you, and then the children start to inherit wealth, and children are very often rebellious, and maybe they won't trust you, or they'll want to bring their own advisors because they want to show they're independent of their parents. How often does that arise, and how do you manage that, for Francois?
It's you're absolutely. It's exactly where I wanted to point. That is that very often the historical advisors are going to be the first generation or the parents' advisors, and in many cases, next gen is going to be willing to take a little bit of distance towards these people. So I say that here you have first to manage to build the right level of trust if you can. If you cannot, Richard mentioned that you have to be very humble. And I mean, the best interest of the family is above anything else. And if you have to withdraw and to bring in another specialist, or to partially withdraw, or to work alongside with another specialist, then let it be, because it's just the family's interest above all. And well, it's a long path. I've rarely experienced being just kicked out, but having some new advisors stepping in the game, that's something which is part of the game also, which is pretty natural. You're just talking of the life of a family through several generations. So it's pretty normal that some new actors, some new advisors will arise at some stage.
It's a horribly general question, but are you seeing differences when you deal with new generations? I'm thinking of ESG investing, for example, and the millennials and Generation Z seem to be very motivated by ESG factors. Is that something that you see at your level with the new generations coming through, that they're more interested perhaps in ESG investing and philanthropy than their parents or grandparents? Richard?
Absolutely. And I think it's, ESG, social impact, corporate responsibility, all these types of actionable uses of wealth is a really healthy thing from a family perspective, and a really healthy thing for the next gen to sort of express themselves, and for the current gen or the leading gen to allow that discussion to happen. And, with social media today, I think that's a real big impact on children and what's motivating them to be involved. And I think it's a much healthier place than where we were in the 1980s or 1990s, where, it was, I think there was more selfishness in the culture back then. I think today that the ESG and impact and social investment, corporate responsibility is all just, it's a really nice way of saying, what purpose is my wealth for? What can I do to help others with it? So I think it's a really great way to show how you're improving the society with your wealth, and also allowing the family itself to engage with each other.
Francois?
I'd say that I'm partially in agreement with what Richard said, but partially only because sometimes I really wonder where is the chicken and where is the egg? we have this pressure, and in Europe it's particularly true. We have this pressure on the ESG investment changes. We have this huge pressure on the impact investment. We have a brand new environment, especially in France, around philanthropy, which for me is the ultimate impact investing process. So I say that's where I'm saying, where is the chicken, where is the egg? Because of course the new generation raises some questions quite frequently, but I don't want to make it too general also, because the old generation also does. And I say that it's really a global concern of many people. But I was earlier today, for example, in a meeting with a very small family, just mother and son. And the person who has the most consciousness towards ESG and impact is definitely the mother and not the son. So I don't want to make it too general here. What I say, and what I would say here is really that for me, the big difference towards the US from the perception I have, I might be wrong still, but is that, yes, we have much more pressure from a regulation point of view on all the ESG changes on the financial industry than it may be the case in the US, so that things may be changing faster here, and all investors are being made much more aware. Just an example, since the beginning of this year and before the end of this year, any private investor will have to have an ESG profile. I mean, this is a regulatory obligation as of now, together with all the other usual profiles that have been piling up over the last recent years through various regulations. So, first, regulation in ESG is quite pressurizing, and yet philanthropy is definitely less developed than in the US. And but it's changing a lot, and it's taking a big part now, especially in France, where we have for the last 20 years a great legal environment that is really providing a huge possibilities for the private investors and the wealthy families.
That's the impression I get. Philanthropy has existed in the US for a very long time, and a lot of the billionaires, their objective is to give away 90 or 99% of their wealth during their lifetime. I get the impression that's perhaps less prevalent in Europe. Obviously, some very wealthy philanthropists, very well-known philanthropists in France. In terms of ESG investing, it's become very fashionable. Is it a trend, or is it something that is really going to make a big difference? How do you make sure that your families that really want to invest in ESG investing aren't being greenwashed, as it were? How much do you actually look at the investments yourselves, or is that something that you think is the prerogative of wealth management companies or private banks or specific investment advisors?
Well, I think the point that you're making, I mean, several. One, in the US, we don't have that regulatory pressure yet for publicly traded companies. There are some mandates now for diversity and certain types of diversity on a board itself. But besides that, it's still pretty free market. And I think the other distinction that's important that's coming up here too is really to draw a clear line between what is ESG versus what is philanthropy, right? Two different purposes. Yep. And that goes, and if it really is a financial performance tool that you're looking to focus on a certain investor, a certain investment area, or encourage certain types of businesses within whatever your values are, I think that's the value. It goes back to what Francois talked about too, is having great governance within your family office ecosystem, particularly on your investment committee, to have those independent people. And particularly, it's important to have independent advisors on the investment committee to ask those questions. Is it an emotional decision? Is it a generational decision? Is it a values decision? Or is it a fiscal, a financial return decision? And really to put those kind of questions back to the decision makers.
And Francois, how much do you get involved yourself in looking at investments and how successful they are and how well they match the family governance aspects?
It's a good question for a difficult answer because, yeah, the universe of financial institutions and investment providers is quite heterogeneous. And you find all types of processes to appraise and to build some ESG investment strategies. So you cannot just go to an investment provider and tell him, okay, deliver an ESG strategy. You have to due diligence, you have to enter into the process and appraise what the people are doing. You have now a few institutions that are renowned for having built some real serious process. Second, we have some regulation throughout Europe, which is making things converging, but you still have to enter into the detail of the processes yet, because otherwise you really have the big risk of the greenwashing.
But you're totally conscious. Sorry, Richard.
I was just going to suggest one particular approach to probably consider, which I do with our families, is to, if they want to get involved in ESG for the first time, right, or they're not sure what to do, yet they are willing to do some direct investments. I would say first look at your own industry, things that you're familiar with, where you've had your success. And are there ancillary businesses or investment opportunities that might either be synergistic with your existing business or are very similar to your business? And because you have some familiarity with it and some previous exposure, it may take the risk level down. If you take the risk level down and you have success, it will only build upon future confidence of the family stakeholders and maybe encourage more ESG. And so you can have that success.
With a direct investment rather than just investing in a fund where you have very little control.
Correct.
And what about direct?
I'd say that in this regard, Ivor, I find it easier to go ESG when you go to non-listed or to direct investments than going in the listed area, which is still as I said, not fully homogeneous, and so you have some goods and some less goods.
And what are the trends that you're both seeing in your family office environment? I'm thinking of things like, are there more direct investments now? Do families want to invest in products that they can actually touch rather than just listed companies and bonds? How important are the female members of the family now? Is their importance increasing? Is the use of technology, even with traditional families, increasing? And is that bringing down the actual cost of setting up a family office? So you need maybe less wealth now to have your own family office. Richard, what are your views on those subjects or any other trends that you'd like to discuss?
Wow, I've seen trends in all those things that you've mentioned. I think really what it really kind of rebooted family enterprise, family office is the same thing that the whole world just experienced, and that's the pandemic. With particular emphasis on the family system, which may have been very hierarchical, right? Very structured in terms of the leading gen operates a certain way. COVID, the pandemic, really evened the playing field because families went virtual for a period of months and months and months. And going virtual really allowed the playing field for the strong talkers in the family, the very powerful people that became more exposed, that they weren't allowing other people in the family to speak. And the other people who were maybe more timid and weaker, who were afraid to speak up at family in-person meetings, felt a little more confident and sure of themselves virtually. And so we began to see this kind of shift. And I think where that may have led to, particularly on one of the items you said, the role of family leaders today, female leaders today, some of those women, those female leaders of the next gen may have been afraid to speak up. But the virtual playing field really leveled it, and from my experience, and really has led to a catalyst of next gen, particularly women leaders standing up And now that we're out of the pandemic and we're back in person, it's really continued that. And they've gained a lot of respect, and there's been a real shift, a real paradigm shift in the family enterprise system.
And what about in France, which is known as being more of a patriarchal society? Do women have their say in France, in the wealthy families now?
Women have their say in France, but the feeling I have is that I fully agree on the impact of the pandemic. The feeling I have is that still the patriarchal generation in certain cases may be trying to take back power or take back part of the power that they feel they have lost through the recent years. And there is a little bit of tensions in certain cases where you see these tensions between the two generations. It's interesting, but I mean, there is once again here, and I mean, we're in France, we're in Europe, so everything goes through regulation. Maybe that's our reality. But there are some regulations around also integrating a certain level of women in all the governance bodies of the companies, etc., which is also pushing quite hardly. I'd say that interestingly enough, I've seen many women emerging as family leaders over the last 5 to 10 years, roughly, including very prominent family groups. And I'm talking of listed multi-billion family groups. So and that's something that was absolutely impossible. And
how do you explain that?
I'd say that there was a transition. And this transition has been accelerated also by the pandemic. And something that appeared back 4 or 5 years ago as something exceptional appears now as more normal. So it's a bit contradictory with what I said earlier, which is that you have this tension sometimes between the two generations. But when it's not the case, then I mean there is a full legitimacy for the women who have taken the power and are today in the position of being the family leader. So that's something which is in my opinion, in too slow but very good progress still. And then IT is definitely a challenge, but contrarily to what you said, IT is not a cheap thing. IT is an awfully expensive stuff. And so it's not less expensive to set up your own family office thanks to technology. I mean, it's even more expensive because you have a challenge around security, data, etc., name it. We all know that. And this is awfully expensive. So I say, and you need the people to understand the systems also. So that not only you need the systems, but you need the people to operate or to understand the system. So I say that technology brings some efficiency, but technology is at the very beginning, at least, also because family offices are usually small or mid-sized entities, and the best systems that you will see are usually dedicated to very big entities, so that there is a misfit between what the market offers and the needs of the family offices.
And are there any other trends that you're seeing in recent times, Richard, in the US or elsewhere?
I think in addition to what we've just talked about, which I agree 100% with what Francois said, the direct investment, the mix in that portfolio is just dramatic. I can recall when I was practicing law in the 1990s, even having 1% of your portfolio allocated was deemed super risky. And then I remember the pie charts coming out from different wealth management firms saying, well, now 5% is acceptable, and then 10%. I think many family offices, if you really look at them today, express their entrepreneurism through direct investments. And I wouldn't be surprised if we're approaching a third of many of these families' portfolios are in direct investments.
I fully agree. I fully agree.
You're seeing that in France and Europe as well.
Exactly the same trend in France and in Europe. And through AFO, we're doing this poll every year, this research every year. What are the big trends? And one of the biggest trends of the last 2 to 3 years, and even longer maybe, is definitely that the private investment and direct investment has been taken over extremely significantly from the traditional listed investments.
And is that because of the volatility of financial markets, or because the returns are better in direct investments, or because families want something more tangible?
Yeah, I think there is the will of getting something more tangible. there is the will of getting away from this irrational volatility, and also because most of the wealthy investors are ex or existing entrepreneurs, and this is a risk that they can understand investing in a company, in a direct company, while investing on the stock market, even if at the end it's a company, they have the feeling that it's kind of a black box which is answering to irrational behaviors.
And is there an appetite for cryptocurrencies and for blockchain investments with the families you work with, or that's a little bit too off the radar?
To be very sincere on my side, it's not majorly in the radar. We do a little bit with a very few clients, but it's not a major allocation yet.
And in the US, it's the same with your families?
Maybe I just deal with very conservative families, but they always like to say they want to invest in the non-sexy industries. I don't see too much of the crypto, blockchain as well, IoT, very little, heavy industrial, heavy manufacturing, real estate seems to be the main categories. And I think with the direct investment, again, I agree with everything that Francois said. The other additional reason for direct investment is to integrate the next gen and to nurture them. Maybe, in a Series A, B kind of type company, they're not a lot of financial risk. It allows them to express themselves, get some experience, maybe get some success. If they do fail, it's not catastrophic, and the family can cope with it and recognize for what it is.
And just one last question before we finish. Francois, when you look for ideas, best practices, benchmarks, how much do you learn from the US or from other regions? Probably the US would be the most significant.
I say that we always learn a lot by looking outside. As I said at the very beginning, US is ahead because the concept of family office definitely was mature back 20 years ago than it used to be in Europe. And I'd say that especially on the investment side, but also I said the philanthropy, certainly we are learning a lot from our US friends.
And Richard, do you have anything to learn from France and Europe apart from strikes and early retirement?
It seems like the grass is always greener on the other side. I think there's this mysticism here in America that we have a lot to learn, and we do, from looking at Europe on how they do things, particularly on the organization of the family. The history goes back further, and we like to learn how to keep families healthy. And so again, learning from others' experience, I would say that the privatization of other economies in Eastern Europe and Asia, Latin America and Africa is allowing both the US and European families to sort of take the lead in those jurisdictions, because it is just a first or second generation experience in those parts of the world. But I think there's a lot of mysticism that we look at towards Europe, particularly France. St. Louis, where I'm from, St. Louis, Missouri, is heavily was founded by the French, and so there's a particular affinity here in St. Louis for the French.
And I'm not sure if it's still the case, but certainly recently the wealthiest man in the world was French. I'm not sure if it's still. I don't know if he's been overtaken by Elon Musk again, but
I don't know. There is a little bit. In fact, the wealthiest man and the wealthiest woman are both French.
So maybe you do have things to learn from.
So you see, that's where we are a little bit ahead, maybe in terms of women getting involved.
Anyway, Francois and Richard, thank you very much for this exchange of ideas, and I look forward to speaking with both of you again. Thank you very much.
Thank you very much, Ivor. Thanks, Richard, for this great discussion. Take care.
It's a lot of fun. Thank you.
Bye.